Welcome back into ClearPath Retirement Radio. I'm Stewart Smith, and Mitch Davies is here with me, and it is time for Mitch's Market Minute.
Thank you, Stewart. I'm excited as always. We're having a great discussion today about long-term care and different options to address that have been working really well in today's environment. We'll just take, as always, just a quick minute to talk about state of the market, where we're at today, what we're watching. So as we talked about last week, the market has recovered all of its March lows. As we've been talking through, a lot of this is just leading on this geopolitical headlines. The biggest factor driving this right now is of course, the ceasefire that was announced yesterday. We've seen a couple back and forth on this with the Strait of Hormuz opening and closing, but basically what's going on is there's a back and forth debate, battle between the parties of the U.S. and Iran, and trying to figure out how we're going to resolve this. And while this happens, the market is uncertain. There's a lot of uncertainty. So we've seen the last week and a half a huge green push, pushing all the way through all-time highs on the S&P, the Nasdaq. We've seen oil come down a bit. We've seen the volatility index retreat a bit. So we're seeing a lot of volatility still. Volatility is still higher than normal. So what we're watching here is for markets to be choppy for the next couple weeks. We're still trading well, still recovered those whole losses, and we're pushing again through all-time highs. But while this plays out for the next few weeks, we're thinking things are going to continue to be volatile. So the biggest thing in retirement, we always talk about this, is to understand how you're allocated ahead of time to address this kind of volatility. If you look at your portfolio in retirement and 1% move on the S&P because of some red news is freaking you out, you're probably over allocated in retirement, right? And this is the biggest takeaway through all of this is if you're in that retirement phase, you can't afford to be stressed and freaking out at red days in the market because of some news, because the underlying factors are good. We have earnings season coming up. Stocks are earning very good money. Companies are doing well. We've got a lot of exciting IPOs this year, which are initial public offerings. We've got some huge companies coming into the market. The biggest is SpaceX. I'm sure you guys maybe have heard about SpaceX. It's one of Elon Musk's companies, and it's coming in. It's going to be valued at a couple trillion. So we've got a lot of exciting stuff going on in the stock market. So the takeaway here for today, guys, is make sure you understand how you're allocated in retirement. Make sure you've got money. Again, we always talk about have a couple years of money set aside in a safe manner, a safe allocation that is going to return 3, 4, 5%, consistent returns, but not be directly correlated with the market, so that we see this kind of volatility, we're not freaking out and stressing out in retirement. But that's all I got for you guys today. We'll jump back into this here.
Okay, great advice, Mitch. And I tell you, if you are freaking out right now, then you are not allocated correctly.
That's right.
It's just that simple.
Yep.
You need to give us a call. We need to have a conversation and tell you and explain to you our philosophy on how to do that and put you in a much, much calmer place where you can enjoy retirement in the way that you should be.